You are listening to ChartingWealth.com for Monday, the 5th of October, 2015. What do we see going on in the market? Well, those of you watching on video, you can see it. Those listening, I'll tell you what's basically happened is starting back on our candle, our two-day candle on the 1st of October, we saw the market start to settle out. In fact, we saw it earlier on our 4-hour chart that we'll look at in just a minute. But what has happened is basically the market appears to have bottomed. Now, we don't have a cross yet going up on the total market, which is what IYY, that's the symbol for the iShares Dow Jones U.S. Total Market Index Fund, which is an exchange-traded fund. Looks like it's getting close to crossing going up. Derivative oscillators losing some of its speed. We do have pretty much a cross here, what one would call a spinning top, so there is still some indecision on the large chart. Let's look, however, at the 4-hour chart. If we go to that, what we see is a huge surge up at the end of the day on Friday. We saw the market bottoming out somewhere around the 29th or so of September, and then it started moving up, crossed over, going up on the short chart back in the afternoon of the 1st of October, and then has continued to move up strongly since then. Now, if we jump back to our two-day chart and go to SPY, Standard & Poor's 500, we do see that it actually crossed over on the two-day chart on the 2nd of October already. That's just the first day of a two-day chart. On the 1st of October, we had a green up candle. And of course, on the two-day chart on the SPY, again, the Standard & Poor's 500, it bottomed out on the 29th. If we look at the 4-hour chart, we see that, in fact, it crossed over in the morning or so of the 1st of October and then sort of petered off and then shot up in the afternoon on Friday. A lot of upward movement on Friday. In fact, a long candle the wick is about twice the height of the candle itself. For those of you not familiar with candlesticks, please go to chartingwealth.com, take our candlestick trainings there. You can find them on the website under trainings, and you will understand a whole lot more. What happens for those of you uninitiated in candlesticks, Japanese candlestick trading, the wick on the top shows how much the price was pushed up by the bulls and then pulled down by the bears. So there was a lot more upward movement than the market ended up on Friday afternoon. So a big upside, but then a lot of downward pressure to pull all that upward movement and exuberance down. Now let's go back to our 4-hour chart, our two-day chart. We're going to switch over to the Qs. What is the Qs? Well, that is the cubes, or the QQQ. That's the symbol. It is actually the S&P 100. What do we see happening on the S&P 100? Well, it's not crossed over yet like the Standard & Poor's 500. It has moved up some, but much more weakly than we saw, and by weekly, W-E-A-K-L-Y. We've seen it move up not nearly as strong as the Standard & Poor's 500. So, going to get rid of that. We had already drawn a downtrend that has been broken. We could start drawing an uptrend, but if we move to the 4-hour chart, we will see that indeed the market itself bottomed out somewhere around 4 p.m. or in the morning hours of September the 30th, afternoon of September the 29th, and crossed over going up in the morning of the 2nd of October and has continued to power up pretty substantially again in the afternoon like we saw on both the indexes. So it ended substantially up on the afternoon of Friday. Now, let's go back to our two-day chart, and I want to particularly show you what's been going on in gold. So we see the indexes are trying to move up. Let's check out what's going on with gold. Gold, as you know, we talked about it crossing over on the two-day chart back on the 17th, and it has continued to power up. Had some down movement around the 1st, and then it has continued up, but hasn't broken that long-term trend. But if we revert on gold back to the 4-hour chart, very interesting. Gold crossed over going down at 4 p.m. or so on the 28th of September, and then powered down, and we talked about this. Gold appeared to be bottoming out somewhere around the 30th of September into the 1st of October, and then on Friday, it zoomed up. Now, it's not yet crossed over going up, so it's still in a confirmed down move on both the big chart and the small chart. It's touched the 30 and the 34 period moving linear regression lines, but hasn't really crossed through both of those yet. So let's just continue to watch it. We still don't have, there was so much down movement and such strength, it's not given the moving average convergence divergence of the MACD enough power to cross over the exponential moving average yet. And that should tell you something, that with all that strong down movement over several days, the 1 day of up movement that stopped at both instances, it moved powered up in the morning, and then it started and powered up in the afternoon, but never got higher than it did in the morning, which again, we'll just have to continue to watch what that actually means. What it really means for us is we don't have a crossover going up on the MACD, which makes us what? Cautious. Okay, that's where we've ended up the markets for the week. We called the bottom in the indexes, and we're continuing to watch gold. So let's keep paying attention to everything. Hope that you have a great week investing. Please join us every day for this important review of the markets. We talk over and over again about paying attention to the charts, not the media noise, because it will mislead you just about every time. That is the media noise, not the charts. The charts are real. The media noise can be a bunch of hype and theater. Join us every day at chartingwealth.com. Follow us on Facebook, Twitter, and Instagram at Charting Wealth. Thanks so much. God bless. Wish you the best in your investing and your training this week.